On Friday, oil prices hit new highs, and today oil continues its rally. Crude prices are rising on hopes that the balance between oil demand and supply will restore soon. Amid a surge in oil prices and positive dynamics in emerging market currencies, the ruble has posted new local highs. On Friday, Brent crude broke through the previous price range of $29 and $32 per barrel after Baker Hughes released its report. According to Baker Hughes, the number of active oil rigs in the United States dropped by 34 units to 258 units last week. The number has been declining over the past 9 weeks and has reached an 11-year low. Brent oil futures for July settled at $34 3 cents per barrel in the mid-trade, which is 4% higher compared to the previous close. The contract added almost 5% last week. The next target for Brent is seen at $34.40. Meanwhile, the mark of $36 per barrel serves as a strong resistance level. Currently, there are no obvious reasons for the price to test it since oil supply still exceeds energy demand. Besides, the cut in oil production in the United States is not enough to start using the accumulated oil reserves. WTI oil futures for June gained more than 5% today and settled at $31 per barrel in the first half of the session. The June WTI contract expires on Tuesday. Last week it posted around 19% gains. The ruble is trading steadily high amid overall positive background. The Russian currency is likely to get more support this week as oil is about to hit the level of $35. The increased demand on the federal loan bonds and the upcoming peak of the tax payment period on May 25 also contributed to the ruble's growth. Today, the ruble opened the trade moving notably higher against the US dollar and reached a new high since late April. The US dollar lost 0.8% and was last seen trading at 73 rubles 89 kopecks in the midday trade. If the oil quotes continue to rise, the dollar-ruble pair will probably retreat to 72.70. At the moment, there are no obstacles for this move. However, the fundamental factors still weigh on the Russian currency. For instance, Russia's economy has been hit hard by the coronavirus restrictions. Besides, it's very dependent on the oil exports revenue. Given all these factors, there is a risk that Moscow can resort to the devaluation of the national currency. The easing of the lockdown measures worldwide raises hopes for a speedy reopening of the global economy. Market participants expect the energy demand to restore soon. In the meantime, the second wave of the COVID-19 outbreak and the escalation of tension between the United States and China pose the main threat to the markets. That's all for now. We wish you a profitable deal. See you on our channel with a new video in a couple of hours.